Greetings, everyone. It's Coach Cam, and we just had a phenomenal software walkthrough. If you missed it, I've already uploaded the replay or the recording. You can go back and watch that. It was a little lengthy, a little longer than I anticipated, but that's okay. It was well worth the time. I'm just going to encourage everyone, if you haven't already, do the practice problems. Do the practice problems. All right. So, with that being said, one of the questions that came up was somebody mentioned the fact that what if someone come into your office or have you to do their return, we're not working out of offices, but you know what I mean. And then they go somewhere else and the person feels like they can get them more, and I was saying that they probably added something to the return. They could have potentially committed some fraud, added some stuff that people wasn't eligible for. But the point is, in order for you to get, uh, in order to increase your refund, you're either going to have to reduce your taxable income, or you're going to have to apply what we call a refundable credit, because there are refundable credits and there are non-refundable credits. So your refundable credits will actually generate a refund for you. Non-refundable credits, they won't generate a refund, but they will, if you owe taxes, they can reduce your tax liability down to zero. All right, so you don't owe anymore, but then it won't go past that and generate a refund. So I just want to focus right now on the refundable credits that you could potentially have on a tax return. And you can see here, I'm only doing for tax years 2022, 2023, and 2024. And the reason being is because the IRS won't give you a refund past the 3 year period anyway. So there's no need to go back further than 2022. I was going to go back to 2021, but then I thought, well, it doesn't matter because you won't be able to get a refund for that tax year anyway. So here they are. Um, the first one obviously is the earned income credit, right? So you can get earned income credit. Um, that's a no-brainer. Everybody know about that for 2022, 2023, or 2024, any year. If you got dependents, whether it be a dependent child or whether it be a dependent family member, you can get your earned income credit. All right. So that's one of the refundable credits. I even put a little bit of instruction in what form it go on, so that you'll be aware of that. All right. We also have number two, the additional child tax credit. As you can see here, um, it actually goes up. It gives you an additional $1,500 per qualifying child for 2022. This year, you get an additional 1,700 per qualifying child on top of the earned income credit. So that's why when you look at, let's go back up, you look at the earned income credit where it says that you have up to 7,430 for three or more children, right? Um, so if you got two children and you got 7,000 right here, when you go down here and look at the additional, you got another 1,600 per child, right? So now we're up. So when you see people advertising those big numbers, they're considering the earned income credit plus the um the additional child tax credit, when they adding all that together, and that's how they coming up with them big numbers on what people, when they say for one child you can get this, for children you can get that. But you have to be careful when you advertise that. um it could be misleading because, as you can see here, the additional child tax credit qualifying children under 17, so they have to be 16 or younger. If your child is 17 and you think you're going to get this extra $1,600 for that, or 1,700 for that child, you're not, because you have to be 16 or younger, right? So it could be misleading if somebody come in and all three of their children are 17 or older, right? And they think they're going to pick up $1,600 per child, then that's not going to happen, right? Because they don't qualify for this additional child tax credit. So just keep that in mind. The next one was the American Opportunity Tax Credit. So this is associated with higher learning, higher education. Um, so they could pick up that extra money for that. That is a refundable tax credit. The next one is the premium tax credit. This is associated with the marketplace and the premium you paying for your health care. That is, some of that is refundable, so you can pick up some extra money there if they qualify for it. The recovery rebate, this had something to do with the stimulus checks that we had. If they didn't get their stimulus check, that's some money that they can pick up there. Self-employed sick and family leave credit. This credit was available. It has something to do with COVID and missing time out of work, but this credit was available for 2021 and 2022. You can only get the 2022 though, because the 2021 is outside that 3-year window. It's already expired. You can't go back and pick it up if you didn't already, but you can still pick it up for the 2022 tax year by amending your return. And like I said, I put some instructions here as well on how to do that, and talked about a little bit about the 1040X, which is the amended return. So those are some of the refundable credits that I could think of right off the top of my head. I just wanted to list those there, and hopefully that's useful when you're talking to your clients about how to increase their refund. So see you on the next video. Go do those practice returns. I'm excited because I'm looking in the 2023 portal and I'm seeing a lot of people doing them. So kudos to those who are doing them and getting themselves in position to be comfortable and ready to do tax returns. But for those of y'all who haven't done a practice return, we need you to do at least one. You want to put yourself in a position where you're comfortable and understand the flow. So reach out to me if you need any help. I'll see y'all on the next video. Peace.